Here we go. All right. Morning, everyone. Let's get going. All right. Last night's session in the States was reasonably solid. You can see there we came up and we actually crossed over 2,000 for the first time in the S&P in the history of financial markets. We weren't able to hold it, though. We kind of backed off down a couple points below. Uh, Middle of the session, all the markets actually reversed down pretty sharply, and then we just kind of moved out to the right from there. But a lot of M&A, obviously a lot of, a big reaction to Draghi and potential ECB stimulus coming out of the Jackson Hole weekend. And, we had things like Burger King and Intermune and that sort of thing. That also really, I think, kind of gave the market a boost. All the M&A action obviously is very bullish for equity markets. We also had new home sales that fell for July for the second consecutive month. Probably not such a big deal though. If we look in the Asian session, you can see it once again. We had Shanghai really lagging the pack. Very little follow through, really no follow through, I guess you should say, on the back of the U.S. markets, and the negativity out of the property market in China is continuing to be really forefront of what's going on. Some of the bigger property listing companies I was reading about this morning offering as much as 35% discounts on certain new homes. Which I think is a bit scary. So the fact that sort of thing's starting to go on may be getting to the point now where we're really set for the property market to really take a proper downturn there and start to unwind some of that shadow banking sector, which could get the market properly nervous again if talk of that sort starts to pick up. We also got Viktor Poroshenko and Vladimir Putin that are supposed to meet today to try and resolve, heightening tensions and between Russia and Ukraine. So maybe a little bit of a positive for the market out there today. Other than that, not a whole lot going on. Our interesting chart here, we're talking about the Eurozone, and we looked at something yesterday with the unemployment rates there between the Eurozone and the U.S. This is a chart showing the inflation swaps of 2, 5, and 10s for Europe, and you can just see here the lowering of inflation expectations. I mean, it's quite scary. You can see here on the shorter term paper, the 2-year paper, we're almost down to below 0.5% yield. So that's really telling, and I think any sort of real shock to the system there would probably put Europe into a deflationary spiral rather quickly. Right, we had Avenge that was out this morning with headline earnings per share, full year numbers of $1.12. That looks a bit soft for expectations. Revenue also looking soft, and they declared no divvy per share, which also is a miss from consensus. Market data today is a little bit lighter than we're probably going to see for the rest of the week. We've got GDP annualized here at 11:30. That'll actually be really interesting to see. Surveys for a positive number. Remember, the prior number was negative, so if we come out with a negative print today here locally, we would have entered a technical recession, being 2 quarters in a row with negative GDP numbers. We've got durable goods out in the States, which is the main number to watch this afternoon, followed by house price index, consumer confidence, and Richmond Fed manufacturing. All right, let's get into the maps. All right, the first thing that we'll have a look at this morning is PNC. And more than just looking at the technicals of this, I also really wanted to just kind of look at this as maybe a bit of a lesson and just between this and between Able, there's obviously you had a lot of nervousness, a lot of speculation. It'd be great yesterday to catch a 40+% move in PNC by being on the long side. but you also had the possibility of a 40% downside, and there are a lot of people out there that had started to short this thing because they were starting to smell a rat. And I think it's a good lesson for all of us that, it seems like the easy money, the quick money, but it's just too dangerous, because if you get on the wrong side of it, you can wipe yourself out literally in an instant. So just keep that in mind. That's Joe Boy's lesson for the day. All right, let's look at ABSA. We're actually going to keep it a little bit light today because not a whole lot of a whole lot of charts that are all that interesting out there at the moment. Not that I could find anyway. So we've got Barclays Group here, which is flagging quite nicely, and this thing just really has failed to be able to drop this support level here just south of 165. We tested it intraday a couple times, manages to hold every time, and I think we need to see a push above 169 for us to kind of break out the top side of this flag pattern. We need to close there. You can see this chart's looking really wicky at the moment, so just keep that one in mind. All right, the next one we're going to look at here is Anglos. Anglos is actually shaping up with a bit of a head and shoulder here on the daily, but yesterday we actually held nicely at the neckline. It'll be interesting to see what happens today, whether or not we to see if we come back down and test this, or if we can just continue to run up from there. There's also some longer term trend support more or less right at that same level, so that's going to be the big level we're going to need to watch. And Anglos, it's going to be right down around 273. If we can get below 273 and hold below 273, then I think we have the possibility of coming back down and testing the more recent lows maybe in June or July. But otherwise, maybe we reverse up. We're going to need to get above this right shoulder at 280.86, and I would even say 289, which is this big level, 288. Sorry, for the past couple quarters, and. So just keep an eye on this one. I mean, this is a very interesting setup if we drop here, obviously. Right, and then the last one I'm going to show is going to be SA Breweries, and you can see SA Breweries here is really testing a major technical level at about 590. So we closed a shade below that yesterday. You can see there very clearly 590 is without a question the level, and we need to push up through 590 before I think this thing can really resume its move back toward the highs in SA Breweries. All right, and that's it for today, guys. Be careful out there. It's going to be an interesting week.